Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. What else do we got going on here? There we go. I hear my voice now too. That's a good thing, also. All right. Starting off, we're looking at the way the markets are. They were a little firm this morning when it comes to the equity markets across the planet. Then they got a little thinner, and now they're just basically unchanged or minus a little bit. Nothing going on in particular there. This is a short week. Tomorrow will be like today's like Thursday. Tomorrow is like really Friday. The markets are closed on Friday itself for Good Friday, so we won't be here. But we will be here on Monday because U.S. markets are open again on Monday, so we'll be going through that. Let's see. What else can we say about that? Well, I think we've seen gold firm. We've seen oil firm. What other products are making their noise around here? The currencies themselves seem to be losing a little value against the dollar again. Our PPI is coming out in about, I guess PPI should be out about right now at this point. So we're going to get another statistic that comes out that confirms that, where there's pressure in production. That's what PPI is, Producer Price Index. Some of the banks are showing they have a little profit, not a lot, kind of a mixed situation. World markets in general are kind of sloppy sideways. We've been saying that for weeks upon weeks. That they're trying. Okay, 1.4. I think they were looking for 1.1. The actual. Let's see. PPI Producer Price Index coming in at 1.4 month over month. I think they were looking for 1.1. And they strip out, all the other stuff out of it. So it's up a little bit much. It's up firmer, so the markets are a little weaker from that. Dow Jones Industrial Average down like 61 points. Let's see. You can see on J4X there. You can see the Swiss pairs trade. Oh, okay. March year over year, 11.2%. The estimate was going to be 10.6. So we're moving cleanly now through the double digits, and so this backwardization of economic growth. Spend money but don't grow and don't build or grow anything is obviously that's how you generate this. You put out so much money out there, so much cash, and so there's less product to buy. But you have plenty of cash to buy it with. And so what it does is it drives prices up. It's classic inflation. Core PPI, it was 9.2 versus estimated to be at 8.4. So we're seeing that slow, steady push, of Mr. Biden's, rush towards socialism. He's reduced our production in oil by about 2 million barrels. He's reduced our opportunity to grow, that type of thing, and that's what happens. But he's putting tons of cash out there at the same time. So it just drives prices up and makes it much harder for economics to function as a free market. All right, let's take a look at the Swiss. Remember, traders, if you have any particular product you'd like to see through our eyes or our opinion or whatever you want to call it, just put it up on the chat line and we will go search it out. And when you don't, we just keep on going through our normal daily rhythm of what we look at. So you can see right here, you see right there, that's the J4X, and that is, you can see, it's got a green hinky ASCII bar. You've got the white line breaking down, so it's a real twist going on, I guess you could say. In other words, it's, is it coming or is it going? And then over here on Chicago Quant, our proprietary chart, which we show you so that you can see the difference between the best and the very good compared to the junk that's out there. This way you can see that how we have J4X set up to match up to our math right there. This way you can get it for free right there going through Dukascopy. And you can see the 2 days now, the bars have been moving up. It closed in a daily buy yesterday. You can see right there. Yep. Plus, see how plot 1 is a plus 0.0012. So we put a little reminder line in there just to make it easier for everybody, like so. I guess what we did is we must have gone into a sell for a day. That's what it was. That's what we did. We went into a sell for a day right there, and then it's back into the buy yesterday, and then you can see the strength today. You can see we were flirting with the weekly sell right there on the bottom side of our chart, but not happening now. Now you can see the white line here on this emulates the white line here on J4X. You see the peak here, that peak right there. So you got a peak here, and then you can see you have a peak here, doing the same things. And so it has the rhythm to it. This is, we take our proprietary formula and we just smooth it with a stochastic. And when we do it on J4X right here, whoa, didn't mean to do that. Where did we lose it? There we go. And when we do it right here, it becomes this zero line that we follow here on the middle, the quant here of the daily right there. So when this breaks down, it says there's weakness. Our work broke down, see its weakness. These red and green hinky ASCIIs match up normally about 68 to 71% of the time to our dot system. And that's a good thing. And then we've been flirting with a volume indicator just to get a general idea of the flow. One of our traders here has said that they've seen some insight into it, so we watch it to see if we can learn more from it. And this is the ask bid volume right here. All right. From there, we'll jump over to the euro. See what the euro's up to this morning. And there's the euro playing with the bottom end of the range right there. That's what this Fibonacci situation right here we've been following for a couple of years now. Now we're back at the bottom of the range, and at the same time, let's put it up on J4X and see how does it look. Right there. Now you see here lots of red, all that red. You see the breakdown of the white line breaking through the dashed line, and sure enough you see it over here on our daily chart, the green line breaking down below the zero line, doing the same thing. And all these red dots, you can see all these red dots from the pressure on the product, and now we're sitting at the bottom end of the range. And that seems to be the recipe too, is that most over the last, until the inflation really became confirmed and accepted, I guess you could say, the range was staying pretty consistent. And then once the conversation really started to become serious, in other words, the administration, Mr. Biden's administration, and his Minister of Finance, or the Treasury Secretary, Mrs. Yellen, who used to be the Fed chair, started to accept that there's inflation. I'm not even sure she still has accepted inflation. I think she still says it's transitory, don't worry about it. But the rest of us recognize it, because when we go to buy fuel for our machines, buy food for our bellies, and clothing for our bodies, and shoes for our feet, and candy for our pleasures, and the end result, all the prices are up. So obviously there is an inflation, and she just somehow or another doesn't see it. And that's, or now, I think now she's blaming Mr. Putin for it. Now that she's I think I heard yesterday that she must have said it half a dozen times, Mr. Putin, Mr. Putin, Mr. Putin. So, but that's what you can see here on the charts, is that the currency pairs have been enclosed, or they've been kind of they've been tracking a channel. Now that's because the U.S. Federal Reserve has declared a range that they're supposed to stay in. In other words, the answer to quantitative easing was, or the reason for quantitative easing was stability. So that was their objective: create stability, increase confidence. And so that was the logic behind it all. And now you can see, it was supposed to go on for a few years. Now it's going on forever. It's QE for life. And with that comes this range trading, and Fibonacci becomes more predictable, and all the moving averages and the stochastics become a little bit more successful because the central bank is keeping everything in line. And so they're using Fibonacci, they're using stochastics, and they've defined a range. And in the range, we've seemed to have spotted the range when Mr. Trump was in office. His Secretary of Treasury was much more informative of the range. He would make an announcement every quarter who was considered manipulating and who was not manipulating their own currency. Now, in a QE era, I have no idea why you would even use those words, but at least he was Mnuchin, Chairman Mnuchin was willing to at least tell us that it existed. You don't hear those words anymore out of the Biden administration. You have no idea what they're doing at any given day. So that's where we are. You can see we're at the bottom end of the range of the euro. All right. From there, we drift over to cable. See how Mr. and Mrs. Cable are doing this morning. And there that is right there. You can see we are underneath the range here. We've been kind of trapped underneath there we've done that a few times now over the last year and a half, 2 years. Get trapped underneath the range for a while and kind of hang there and then finally lift up. And you can see it tries to go to the top side of the range over here. In this case here, the green line is the 50 percentile. That's the 0.618. So, it can get up to that and stall out. It can do things like that. You can see it there. It stalls out again at the 618. That's back in October of last year. And then you can see, for a long while, it bangs around the 50 percentile there and there and there. You can see if I can get that mouse going there again. Let's do that again. Right there, right there, right there. You can see it bouncing along the range. You can see it hitting the top of the range back in, is that 2019 or 2020? 2000 in May of 21. And so you can see they play the range. There's one spot there back in February of 21 playing the range. Then it's trapped underneath it again here back in 2020, so forth. So what we see is this range trading that goes on, but with inflation, they have to adjust on some level, so they're probably giving them a little bit more latitude on defining who is manipulating and who is not manipulating. And we have no idea even what the punishments are. We have seen some strange things occur in the sense of we've seen the Central Bank of Italy or something like that, or the Central Bank or the Exchequer of England actually go to the Fed window and borrow going into the last couple of weeks of the year just to what they call size up their position. In other words, make it equal on both sides. So you wonder, in an era of quantitative easing, how is it that they're printing money, but somehow or another they can't print enough money, and they have to go to the Fed window, to borrow from the Federal Reserve for 2 or 3 weeks? How does that work? In other words, how much does the Federal Reserve have a rope around all these other central banks' necks, or a gun to their head, or however you want to describe it? But one thing is for sure, that there's some real strange financial games being played between the central banks too at the same time. All right, from the cable, let's jump over to the Turkish lira and see what the Turkish lira is up to this morning. And right before we do that, we'll just throw it up on J4X there for a quick look. You can see all that red comparing to Chicago Quant right there, doing the same thing. You can see the lines here of the stochastic over here doing relatively the same thing, creating a low right there. It did the low right there. Same way we're doing those lows right here and right there. Same thing. All right, now let's take a look at Turkish lira, see what that looks like. We're going to go to the dollar Turkish lira, and from there we'll jump over to the euro Turkish lira. And as you can see, this product has been trapped in what we think we've defined the range. We spotted the range, and the range has been a real resistance. It just keeps on hanging there. You can see we are in a daily sell now for a few days, so the pressure is on. But the weekly, let's just show you the weekly a little bit wider. As you can see there, the weekly is very firm. Very, very firm. And doesn't seem to want to let go. Overall, the euro, we find the euro Turkish lira a much more usable product than the dollar Turkish lira, but due to the fact that the dollar is, the world reserve currency, I'm sure that, that's the influence of that. Now we're going to jump over to the euro Turkish lira. Let's take a look at that right there. And at the same time, let's just go right to the euro Turkish lira on J4X right there. You can see all that red. You see it pushing down with those hinky ASCII bars. You can see the same thing here. We've been in a daily sell now for a bunch of, couple weeks now. Lots of red dots. We're at let's tighten this up just a little bit so you can see the range again. We have it boxed off in yellow right there, and then we have it Fibonacci'd at the same time. So you can see it has played with the top of the range, but has not really pierced it. Just like the dollar has played with the top of the range, kind of adhered to it. In other words, it's kind of stuck at it in a sense. Now, you can see at the same time there's a minus right there on our weekly signal, our weekly quant. And you can see the pressure is starting to build. See that plot 1 there is a minus 0.0004. So we're seeing a little more pressure on this product. We're thinking they might come down and play with that 618 right there, or even drift as much as down to the 50 right there, the green line. So between the yellow and that, we kind of think that's kind of where they want to rest, especially if it gets into that weekly sell. And so that's usually the recipe to it all. And then you can see here on the J4X, you can see we are just like we are over on the daily here at the bottom end of its range. You can see the same thing going on right there at the bottom end of the J4X range of the stochastic. So then maybe they'll go sideways a little bit here, bounce up a little bit, little dead cat bouncing, and then next thing you know, it's kind of chills, and before you know it, you're sitting there and it's like, oh, okay. They'll be in a little sell, find a way to roll over one more time. Remember, traders, markets never seem to go straight line-ish as much as they go in like a zigzag pattern, like a way a rabbit would be tacking, or a squirrel or some animal trying to cross the road starts to tack, like as if it's going left and right, like a zigzag. And markets like to do that. They like to do the same thing. They go ziggy-zaggy. What happens is that the zigzags are generated by taking profits or generating a profit, or buying in and averaging in, or so in other words, there's always this back and forth, back and forth. Let's see. So from the Turkish lira, we'll drift over to the Canadian dollar. See what the Canadian dollar is up to today. We'll throw that up on J4X to start off with. Right there. You see the green, the pressure here, giving you that indication of the strength that's coming in. This is a daily chart there. And then over on Chicago Quant, this is the primer or the key itself. And it will show you same situation. Green dots and a daily buy right there. Weekly is trying to turn up. Sloppy, but trying. It's been in a weekly sell since here. Kind of bounced around a little bit for a little while, then went into a daily sell right there. You can see, and then it was winner, winner, chicken dinner, so forth and so on. For you, anybody who's new here, you're welcome to ask and say, can you explain the chart if you need to? No problem at all. We have a webinar out there somewhere. I think Janos has put out a webinar from Dukascopy that's how to read our charts, how we roll. All right. From there, Oh shoot! I owe him an email. I just remember every time I say that. I remember I owe him an email for an explanation, and then what I do, the market's open up here, I get consumed. I'm just another little knucklehead in the end. All right. So the Canadian, when we look at the Canadian, normally because it's a very interesting economy, Canada. It's parked next to the United States. It's a very safe place to be. It has oil. It has the metals complex. It has minerals. It has an educated workforce, and it's not that large when it comes to population. So they are kind of insightful in a sense of how the oils are moving and the metals and so forth. And so when we see the Canadian moving up against the dollar like it is right now, with all those greens and a daily buy, that means it's losing value against the dollar. And normally when it's losing value against the dollar, it usually means that gold is going down in cost or oil is going down in cost. So let's take a look at those two products real quick and see if this is true. What to do, what to do, what to do. Is it true? Let's see. And we'll leave Canadian up on the J4X. This way we can look at it at the same time. And there's the 10-year bond. Now there's crude oil. And crude oil is going up in value. So it's kind of a surprise that Canadian is not going down. And then there's gold. Gold's doing the same thing. You can see it's going up in value. Now gold's been in a buy this is its 5th day. It slid into the weekly sell last week, but it's right back in the saddle again. Back in the saddle again. And then same thing with crude oil. Crude oil slipped into the weekly sell after something like 10 or 11 weeks. But since late December, it went into the buy in the 70-ish area. Low 70s. And next thing you know, it's trading at 131. Woohoo. And so we're seeing a little odd dichotomy today. It happens once in a while, where we're seeing strength in metals, we're seeing strength in oil, and we're seeing weakness in the Canadian, which is, like I said, it's rare. It happens, though. It happens about 8 out of 10 times that it's accurate, and 2 out of the 10 it's inaccurate, and here's one of those 2s. All right. From there, let's see, where are we at? So there's the oil, and there is the gold. So from gold, what we do is we go and take a look at, think about it, we go and take a look at the South African rand, a gold producer, right there, and you can see it on J4X. You can see that pressure, and it's going down. It's gaining value because gold is going up in value, and that's usually the way this works too. And it has about an 8 out of 10 time correlation. And let's take a look at it right there and see how it looks right there. There it is. We've been in a daily sell since right there. Been in a weekly sell since over here. So it's been week after week after week. We confirm our weekly signal. Every week it reconfirms it. And so we put a line in there to show you. Oh, you can't see that. Let's see that right there. There we are. So it's been in a weekly signal since here, saying to us, play the short side, don't play the long side. Just protect yourself on the long side. And that's what's kind of neat, because it keeps you honest, allows you to make money. The objective here is to make money, not to trade. That's the whole name of the game, make money. And so in this case here, you can see the product has been kind of adrifting towards the lows of the last 6 months or 8 months or something like that. Let's see last time. Let's take a look at it on J4X. The last time, we'll put it up as a weekly chart. When's the last time? Obviously you can see we were there just a week ago, and that is, I think, like a 9-month low maybe. Let's see, there is what is that? That's the September of 2021. So you can see we're starting to play with these. What is that? That would be September and October and November and December. That's 4. And then we're in 4 months now. So that's an 8-month low we're kind of heading towards at the moment. And you have to say is that as this thing keeps on finding ways to go low, do you wonder, are we going to see, $2,000 gold again? Okay, put that back in there like that. There you are. And you can see here the white line is pierced. You got the red hinkies. You can see the volume is sideways to down. So all the indications on J4X is showing that there is some sellers out there. They keep on finding way. I'm sorry, they're buyers out there selling, buying South African rand and selling U.S. dollars, which is a kind of a unique thing globally, since it seems like everybody's playing with the holding on to the dollar because it pays a return, not counting that it's guaranteed that you're going to get paid back in dollars. And since it's a world reserve currency, it's more stable than anything else out there. And that's part of the whole process of it all. I can't even imagine like a China even trying to be the world reserve currency. To start off with, their currency doesn't even float. So it would be like, okay, today we'll declare that the currency is trading at this. That's what it is. Boom, done. No, at least the ruble, not supposed to say that name. The currency that shall not be named, at least it floats. It's a floating currency. And now they back it with gold and oil. It has a little bit more juice to it, But, and we'll take a look at that too. All right, from there, we drift over to the currency that shall not be named. It's like Voldemort in Harry Potter, right there. You can see we went to a daily sell a couple days ago. Yesterday it closed in the daily buy again. It's kind of back to pre-invasion numbers. It's been in the weekly sell since right there. And then I guess we can throw the buy in there like that from yesterday. And they are flirting today with the sell right there. Let's see what the numbers are. You can see that right there. Plot 1 is minus 0.03. And you can see plot 4 is minus 0.05. And then plots 2 and 3 are the time manifold, the purple time manifold there. We could, matter of fact, why don't we change that to the Bollinger Band type color things. So make one green and make one red like that. There we are. That's always fun. And we've shown you using cable as an example how our what we call a nonlinear time manifold, which is one standard deviation of our formula, just the way Mr. Bollinger, John likes to do a one standard deviation from the last price of a product. How accurate it is. Ours is ahead of Bollinger by a couple of days. And you can see here right now it's getting very tight. And it did do the flirt. And we'll see if they... I think it's going to park itself in the 80s. I think that's the way it's going to go. I think that somehow or another this atrocities that are going on in Ukraine is going to stop. And they're going to, somehow or another, they're going to walk their way back out of it, kind of make it a stalemate, and then kind of retreat a little bit. Before you know it, it'll be like North Korea, South Korea. It'll be kind of like the unofficial end of a thing that didn't end. And then from there, I would have to assume that things are just not going to play out the way Mr. Putin expected them to. All right, from there we go over to the Japanese yen, which is playing with like 6-year highs now, right there. And you can see we've been in a daily buy right there. And let's put it up on J4X, like so. See all the green hinkies doing its hinky thing. And you can see, breaks into a little sell here. It goes down for a couple days. And then back in the saddle again. Now it's trying to break down a little bit there. Our work is still moving up very strongly. And you can see we've been in the weekly buy since right there. All right, that kind of pretty much takes care of the Japanese yen against the dollar. And again, we also try to throw that caveat out there that to a great extent we believe that most of the noise is from the inflation. So they're running towards the dollar, buying dollars, buying bonds, buying stocks with those dollars, getting a return. In other words, making money. something that a lot of places in the world people don't do anymore. They don't make money when they buy bonds. They lose money. So at least here in the States, we give you an interest rate. The 10-year bond is yielding almost 3%. It's 2.73 at the moment, rounding that out enormously big. But just the idea of 3% versus I think in Europa, it might be literally a quarter percentage point at best. All right, and then from there we take a look at the local currency again, not the Canadian. This time we go over and take a look at the Mexican peso. Right there. Activate. And let's do it up on J4X. Activate. And there it is. You can see the Mexican peso trying to break down again, playing with the bottom end of the range right there, just as it's doing right there on the chart. You can see it there. You see we've been in a daily sell for, this is the third day now, 1, 2, and a 3. It broke the zero line. That's what puts it into the sell. Jumps across the zero line on the plus side, it puts it into the buy. Breaks the downside, puts it into a sell. And that's how that our math rolls. We try to make it sweet and simple. And you can see here, it's been in a weekly sell since basically right there. And when you have the sells, you can try to trade the sell side very easily. And when you are in a weekly buy, you can trade the, like in this case here, there was the weekly buy. And well, it started off right there, so it was in a buy from there. Then it gets into a weekly buy there, and that's the part you can make do re mi off of right there. And that's the objective, as we always say, not to trade. The object is to make money. Money, money, money. All right, now from there we close out on the currency pairs, and we can go back to them. Anybody that wants to see something, like Kelly might pop in soon and say, hey, I'd like to see cable Swiss or something like that, or someone might come in and say, I want to see Aussie yen, or some type of pairs trade. We'll throw it up there and you get a flavor of how it looks through the eyes of our mathematics. And that's the gig of it all, really, in the end. Okay, let's go over to, from here we go into the metals complex. So let's take a look at gold right there. You see we've been a buy for 5 days now. We're getting back into the weekly with not much of a problem. Over on J4X, you can see the same exact thing. Right, not there. Nope. That's not it. Right there. There it is. See the same thing. Green hinky ASCII bars moving up for the last 5 days, showing strength. Right there. You see the white line has pierced the dashed line. That's our zero line, this dashed line there. And at the same time, though, you saw the volume increase a little bit, and then it's decreased again, which is a little surprise. Maybe at the top and end of the range. Maybe they just don't have any direction. I mean, we can never really figure the story per se out. But one thing we can do, we can tell you where the math, the quantitative math, tells it's going. And 8.5 out of 10 times, our quantitative math is going to be right. That's a big winner, chicken dinner. Sometimes it can drift as high as up to the 9s. So, that's the real answer to it all. It's not the story. The story is like the sizzle. It's like when you smell a good meal. It's like, ooh, that tastes good. I can't wait to try it. But in this case here, you can see that the gold has been showing some strength. It's holding on firm. And now let's jump over on J4X to see what Mr. and Mrs. Silver looks like right above it. And that's doing the same thing. Robin called me yesterday and said something about, the last couple of days we've been talking about the silver, how we like it. Matter of fact, let me just take a look at silver in our work. Did I miss doing something with that? No, I didn't. Okay. So you can see here the weekly is trying to join in as we speak. At the moment it is, what is it? Plot 1 is actually equals 0.00, so it's into the zeros. Same thing with plot 4, it's into the zeros, so it's barely through the plus side. But at the same time, we've been in a daily buy now for 4 days. Since the 250-ish, 260-ish, 270th area I'm sorry, not 2, 24. And now we are at we touched the 26 area today, or 25.99. So it's been an interesting little pop there over the last couple of days. All right, let's see. From the silver, let's take a look at copper. Copper's been kind of a chop slow, maybe because they put Shanghai to bed or something like that. You can see we have a little volatility signal going on as we speak, a red dot and a green dot. You can see the weekly is lifting through with no problem there. And you can see we've been in a sell since here. So it's kind of stuck in that neutral spot. They don't know what to do. I mean, China uses copper like other countries use gold or silver. So it's kind of interesting that, when you see copper sideways the week, it means basically that China is stuck in some type of like neutral economic stance at the moment. Not really running hot and heavy, but not getting knocked down, not telling us that, buy, not telling us to sell. It's kind of like neutral, kind of standing around. All right. And then let's take a look at the last of the metals we like to stare at. And that is the platinum. Right there. There's July platinum. You can see we're trying to show a little bit more life in it. We've been trying to get into a buy, but we keep on having these volatility signals like, no, be careful. 3 days in a row of it. Red, green, red, green, red, green. And today it's trying to say, no, we want to get long now. But we're in the weekly sell from here, so kind of makes you standoffish. If you're going to do anything, you would want to marry a binary or an option call or put to it, depending on what your position is. If you're trying to be long the daily and short the well, it's in a weekly sell, so you'd really want to take the sell side trade. But right now it's kind of stuck. It was a winner in the beginning. So you went into the sell. Where's it at? Right here. Let's widen this out too. So it went into the sell there, and okay, so it went down from 973 down to a low of 945. Nothing fantastic, but it can't seem to find a way to get into the buy. But today it's acting a little bit better right there. We'll see how it plays by the end of the day. Ooh, Tay. All right, from there we go over to the energy complex, and we show you there's a spot oil. Oil's up around 102 with a high today of 102.89 high, 102.08 last. So it's staying relatively firm. Closed in a daily buy yesterday. You can see the weekly is trying to get back into the buy after months in a buy. Went into a sell last week and is rallying back, as we would say. Over on J4X, let's take a look at Brent. Right there. Brent doing the same thing. A couple of days of the green bars, white line piercing through. Volume literally almost flat. So, we don't really expect to see oils being sold. We could see them calming down. We could see them, the supply structure changes. China, I don't even know how to interpret what we saw happen in China. The idea that they'd locked down millions and millions, tens of millions of people, slowed down their oil purchases, which then added oil to the world market, which calmed down the price of oil a little bit. And so that's, so I'm not sure if they're helping or hurting or what they're doing. But in the end result is that oil got a little bit cheaper, made life a little bit better for a lot of people. And I guess that's the power of a dictatorship. You can basically lock tens of millions of people in their apartments. I understand they were using like bicycle chains on the doors, things like that, just locking people in, and they promised the people they would bring them food and water and so forth, and then they kind of forgot about it. And I guess when you have 1 billion people, if you lose 20 or 30 million, it doesn't exactly shake you up. It's sad to say, but that's the way they treat them. And you see those pictures Those videos live where people are screaming in the cities, you can hear them from the balconies in these high-rise apartments, just screaming, help, and they need water and they need food and medicine, and there's nothing really going on clearly in the sense of if they're being helped or not. All right, from there we're going to go to natural gas, right there, U.S. natural gas, trading at the high ends of the range, and you can see how well it's been hanging out there with all those greens compared to just one little red. And we've been in the white line above the dash for a while. Same thing here again, and now it's trying to lift one more time. And this is the curious one, is the volume dipping down right there. And let's take a look at it over on Chicago Quant through the eyes of the best quant around. And if you can find a better one, please show us. We'll be glad to learn and use it ourselves. And then there is right there. That is natural gas. Now this is at $6.72 a cubic foot. $6.70. Well, actually it's $6.77 a cubic foot right now. And you can see we've been in a daily buy for 3, 4, 5, 6, 7, 8, 9, 10, 11 days now. We've been in a weekly buy since the end of January. So the pressure has been on from the $4 area to now we're at, we've gone over 65% higher. And we're at the $6.76 area as we speak, 77 area again. So there's been a lot of pressure on the upside in the natural gas. Thank you, Mr. Putin. And then let's take a look at it through the eyes of the Europeans themselves. Last we saw, it's been trading in the 29s. There it is there, 29.35. Doing the same thing with all the buying going on there. So in the States, you can buy it for $6.70. And for about 4.8 times more, almost 5 times more, you can buy it in Europe at almost 30. Ouch, ouch, and ouch. I don't think you want to define it any other way, but ouch. For cubic. Thank goodness the warmer weather is starting to come in for the northern hemisphere, because the people need a vacation from paying all that beaucoup money. That's the word in Vietnamese meaning a lot. Beaucoup. Big. Lots. Okay. From there, we drift over into, let's see, we got the nat gas done, we got the crude done, and that's pretty much the name of the story. How about if we see fuel oil? We haven't looked at fuel oil lately. Is that there? Where is that at? That's HG. We used to have heating oil on here. I don't see it anymore. That would have been fun, or jet plane oil, or that type of thing. It's kind of fun to watch. See the action in it. Well, we should do that. Let's make a chart and do that for the fun of it, since it's a nice quiet day and no one's complaining or saying I need this or that. I mean, I'm glad that anybody asks a question. We really want them to ask it. Alright, so there's that. Let's go like that. And I think we have to add it too. Let's see, so instrument. And HO, I think it is. Like that. Or is it, let's see, it's the gasoline. Let's see. What is gas? Let me find that symbol. Unleaded, maybe? Let's find that symbol. I think it's unleaded gasoline. It fuels the planes and the cars and so forth. Let's see if we can find that. There we go. Go over to there. Go to there. We're going to find the symbol and we will put it up on there. And the symbol is see, where's it at? Ethanol. Wow, what's going on with that? Let's try that one more time. Crude oil, ethanol, heating oil, natural gas. Oh, there it is. Robo. That's it. RB. That's what it is. RB. RB. There we go. Add. I haven't looked at RB in months. We had a client following it, so it was kind of neat. but then they stopped using it, so we stopped paying attention to it also. Let's see, so it would be April to May, so let's do June. We're going to put June in there. So the M, where are you? M, June, April, January, June. Where's June? There you go. There's June 22. And we'll see it together. That'll be kind of fun. There we are. There we are. Now let's take a look at it. You can see it's been in the weekly buy. Let's tighten this up a little bit. Right there. It's been in a weekly buy since back here in the end of January. So it's been in a buy since the $2.50 value. From it, it's been in a buy ever since. Got up to $3.64, so it went up 50% in value. And let's see if we can put some of these dailies and weeklies together, making them better. We'll move them out of the way. So like right there, there's a buy. Right there is a sell. Right there is a buy. Let's see, we can move that out of the way over there. And we can move that out of the way right there. And there's your sell. And there's your buy again right there. And we can move that right there. And there's the buy right all the way back there. Let's erase some of these like so. And then let's see. I can take this one right there. Put that into the cell. And what else we got? We should widen this too so you can see it better. And then the buy is way back there. And we'll just get rid of the rest of them. We'll leave that one in solely because that buy was back here and that sell was right there. We'll erase the rest like that. And there's the product. I find it to be interesting myself. And we're going to call this Robo, which is the oil that makes the automobiles run. There we are. Robo. Arbo. All right. So that's been interesting. Let's do a save to that. There we go. All right. So now we get a flavor of what's been going on to power the automobiles. And with it, you can figure out the electricity because it costs the same or a little bit more to power up an electric automobile. So it makes it tough there. And when we widen out more like that, you can see how good the little signals were. And what else we got going on? I guess that's about it there. All right. And so we've seen crude oil, we've seen Robo, we've seen Brent. You see the action in Brent C oil. You've seen natural gas. Natural gas is really pushed up there. All right, from there we're going to drift over to the stock indices, and we'll take a peek at those, and we'll take a peek at the Bitcoin at the same time. Let's show you the Nasdaq 100, which on Dukascopy is referred to as the USA Tech Index. That's what we call it. That's the official name here in the States too, but everybody that's so actively traded, they refer to it as just Qs. Familiarity, you know. And right there, you see it's pretty much unchanged. Been in a sell since up in here. You see the pressure that's on it, but still in that weekly buy since back in here. So we're really stuck in that kind of like neutral, we don't know, maybe, maybe not type of thing. It keeps on saying basically that, well, it's going down, but it's in a weekly buy, and but we don't want to sell it because there's no other place to invest in stocks, and we're paid to invest in stocks, and we got to invest in stocks. And that's really the story, really, is that money. There's so much money out there that it has to be invested in what it says it was incorporated to do, and that is invest in stocks. So that puts pressure on these things to be bought. All right, let's take a look at that on a short-term basis, an intraday basis, right there. There it is right there. Went into the buy right there about, 9 minutes ago? And it has been climbing ever since, bang, 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 up. Went into the sell right there and went down, bang, 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 bang. And went into the little buy there. It went sideways up a little bit, but nothing particular exciting. Here it went into the sell, which was very nice, and it went bang, 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 down, 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 all the way to this point right there. And this is what it looks like on an intraday basis at, let's see, which one is this? This is at the 1.5 Tesla. We do this in a spatial mathematics. And now you go, what is he talking about, spatial mathematics? Well, everybody's used to the idea that you look at bars, like daily bars, weekly bars, monthly bars, quarterly bars. For some that trade intraday, maybe 2-hour bars or 1-hour bars or 15-minute bars or 5-minute bars. And what we do is we look at them in a spatial way instead of a time, like a Mr. Newton time thing, We look at it in 300, in this case here, it's 639 contracts. So 639 contracts trade, that's a bar. So it's not represented by physically every 3 minutes or if every 5 minutes or every 2 hours. It's represented instead by the natural volatility. And so we do ticks or we'll do contracts, and it makes the bars much more, I want to say, more explanatory. It gives a better representation of what it's doing. And you can see here they're still marching along on that intraday thing. And we went through the zero line there, and of course it finds a way to go up in value, or at least fights to go up in the value. One or the other it's going to do. And with good money management, in other words, stop orders or marrying to binaries or marrying it to calls or puts, you can really be very accurate in making money. Very high percentile of 8.5 out of 10, and that's how you do it. But unfortunately, when you say binary options or options or strike prices or premium, you terrify people. Those scary words, as I always say, options, those scary, scary words. And so that's what you can see here just on the intraday trading, is that you just made up another new high of the last hour or something like that. And it's still doing it. See, it's refusing to break down below the zero line. You can see our we have a couple of indicators. This is the, let's see what this, we'll tell you what this is. This is, there we go. This is the gas line 5. And then below it is the gas line, oh no, okay, down below is the gas line 5. And we'll close that. So this is a gas line 5. And there's the zero line. Let's put that zero line in there for fun. Like that. See, it's trying to flirt with some weakness. Look at that. It's breaking down. Look at that. See if we get a little red dot and it'll bounce up a little bit and then maybe it'll be a good little short. We'll see. This is breaking down. This is the gas line 3.5. Yep. Cancel. And so we like to show you intraday trading sometimes to show you how accurate the math can be. Now, notice the histogram has not broken down yet. And until that histogram breaks down into the zero area, see, it's right there now, right at the zero. And it's trying. And the little blue line, which normally is a dashed line, let's fix that, like so. There we are. The blue line, okay, it's trying to break down. Looks like a red dot. You got the pressure here. Oop, you got the pressure right here. And let's see how the weakness goes. I would assume it'll be a little bounce up and then maybe a roll over. It's that classic A, B, C, you know, that type of thing. We'll see how that goes. This is where money management comes in the skill set. Let's see if we come down and maybe challenge like the 91 area or something like that down in here. You see it's drifting pretty far down and we're not losing that much value. So they may just go take out literally just these simple lows and that is about it. You know, in other words, you can see here when it goes into a sell, if we don't see it dropping in value, a lot of times they stall out and they have a hard time breaking down. It means there's more buyers still. Nope. Okay, there's a new low. So there you go. And you can see the weakness that was here because it broke through the zero line. And you can see here this is through the zero line, but it's really not breaking down much. And see, that's the whole idea, is not just to trade. The idea is to make money. So don't just automatically, you know, little profit disappear on you. Take the profits. You can start over again. It's not that I always call it instant gratification. So in other words, you know, you saw here when it went to the sell, it gave it to you and gave it to you and gave it to you for about 5 or 6 bars. In this case here, it's still fighting. You know, it's making some money, but it's not making enough as far as I'm concerned. And I would have taken a profit and said, okay, let's wait for the next good trade. And you can see here it's trying to turn up a little bit at the moment. And, you know, maybe they'll give it one more push into this area, challenging this area here. And then it'll be like, okay. And so sometimes you make a lot, sometimes you make a little. Sometimes you might even give up a little bit. But most of the time, it will stop you from losing a lot. Or losing it all. 8.5 out of 10 times it'll be right. And that's the way the math goes. And so I always say to traders, well, if it will work in a short intraday basis, then of course you can trust the longer term. And you can see there, you know, it went into that sell back there on the 5th of April. And here we are, you know, what's that, 8% lower, something like that. So it went in the 5th, closed at 14,828. Today we are trading at 13,900 and change. So, you know, it's not bad. Almost 1,000 points. All right, from there we'll go take a look at the most popular of them all, and that is the S&P 500 right there. And there's your daily. Went into a sell just a couple days ago and has done pretty much nothing but go sideways and torture you. And again, at the same time, we know we're in a weekly buy, so you've got to be careful because the overall longer term money is saying, I don't want to really sell because I'm paid to buy stocks, and when I do, there's no other place to go. And that's pretty much what the story is all about. And then we can, as you can see here, that's the S&P. Yeah, that was the S&P. That wasn't the NQs. So you can see here the S&P fell down like that. Now we can take a look at NQs, which I thought we were looking at, and that's a 2.5 Tesla right there. Let's fix that color-wise. There we are. You can see there it went into the buy there, went up in value. Went into the sell right there, went down in value. Went into a buy right here, found a way to go up in value. Went into a sell right here, found a way to go down in value. Went into a buy right there, found a way to go up in value. Ta-da, ta-da. I sound like a broken record, don't I? Anyway, all right, we've had enough fun today. All right, traders, remember, tomorrow is like the last day of the week. We'll be off on Friday for Good Friday. And then we will be redoing our webinars again on Monday. Because the markets in the United States will be open. So this is Doc from North America saying happy trails to you until we meet again. Happy trails to you, to all our Dukascopy trading friends. Later, traders.